Coming to the end of Q2, and what a Q2 it has been. If you were worried about the war with Iran affecting the market, wrong. If you were worried about inflation exploding and ruining the market, you were wrong. If you were worried about the huge CapEx spend hurting some stocks, well, you were kind of right on that. Hardware versus software. We're going to wrap up Q2 here. We're going to look forward to Q3. Not much earnings, but we got a bunch of movers out here. We're going to bring solar stocks into focus here because they were on the move. Cameron Dawson, CIO of NewEdge Wealth at 8:35. She'll be joining us. We're fired up, folks. It's a synthetic Wednesday on PreMarket Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, good morning, traders and investors. Starting out in the green again, but off the highs of the pre-market session. Up 6.5 handles, 75.0675. The buck, the relentless rally in the buck. Back up over 101, up 26 cents, 101.14. TLT slightly in the red, but man, that chart doesn't look too bad. Down 20 cents, 87.25. USO trying to find a home here in the 108 area, up 82 cents, 107.90. GLD and SLV. Yes, you can hear it first. They've had one of their worst quarters in 87 years. You have GLD down up $1.53, 370.11. SLV up 66 cents, 53.34. And Bitcoin, what happens when you hang around support too long here? We are down $1,180 at 59,375. Should I forget that our charts are sponsored by TradeStation, born to trade, chart analyze, customize, all on one platform. Trade smarter, move faster, and stay in control with the platform built for serious traders. Triple D, it's a Tuesday. We broke a 5-day losing streak here. Is there more gas in the tank in the market today?
Well, this seems to always be more gas in the tank in the market. You know, the bears, they're away for a day. They're out for a day or two, and then the bulls just come back in, need all their food, and send their bears back to the caves. I mean, that's kind of what happened here yesterday. So, it's the hardest market to be bearish with. And the title of the show yesterday was probably the best. Don't fight the Trump. I mean, market goes down. Trump does everything in his power to bring the stock market back up. So, I mean, if you're sitting here, again, I'm going to say what I did yesterday. It's like a repeat, but it's working. You're sitting here bearish, waiting for the market to crash. You have the Trump put. We talked about the Fed put for so long. You have the Trump put, and it's not going away. And this president cares more about the stock market than any president in U.S. history. And if you're long stocks, that's a good thing. Brentster, come on in here. He's watching the news desks. He's looking at 8 o'clock news filings there. I can see him reading.
Yeah, how do you know? How did you know?
How do you read a filing like that and know what to say in 8 seconds? Because the filings I get, I'm like, oh, okay, yeah. Located in Boston, Massachusetts. The address.
I am right now reading the Poet. Poet just issued a press release, says they're going to recap highlights of CEO's update on commercial activities at their annual general shareholder meeting, which is going to be... Wait, this already happened. This is nothing. See? You jinxed me, Joel.
Well, it was moving. The stock is moving here.
Oh, it is?
Yeah, a little bit. It popped up a little bit here. But, we had lots of news here, and we've got lots of news overnight here. S&Ps are in a little leak here. We were up quite a bit this morning. We just lost about 10 handles in the last 10 minutes. So Joel looked through the news wires and see what Trumpster has said. Or, sorry, he's probably not said anything because he says stuff market goes up. But, maybe Iran said, oh, yeah, we're bombing. This is what we do. Iran bombs a little bit. And then Trump says, oh, we'll bomb back a little bit. And then, oh, it's just a love tap. Oh, and we've got peace talks there. And that's how we go. And around we go 47 times. Okay, Round and round.
I want to do AV results here in one
We're
second.
getting that, but you're excited. Go.
But what if you if you want to sell into strength in your portfolio? Like,
Okay.
let's say you've been in it for a really long time and you just can't believe these elevated levels of the market. Because it's so easy to panic when the market's going down, right? And say, oh, I got to get out. I got to get out. But what about a time where, everything is perfect? The president's supporting the market. We don't care about the war. Everything is fine. Everything is fine in politics. I mean, is there something to be said about lightening up into strength in a market instead of panic? And you can't hedging with options. Oh, what month? Futures, hedging with futures, very difficult. I mean, I know I'm an old guy. I'm asking for a friend. Okay. I'm asking for a friend about just elevated markets and selling into strength as opposed to weakness.
I always sell into strength as opposed to weakness, but the best thing is to just follow the Lisa Elconin portfolio and just never sell. That's the way to do it. That's the way you build generational wealth there. Is just ignore it all and you just buy good companies, reasonable valuations, and you never sell. Joel, you would be like me. I sell, I buy, sell, I do trading. I've always traded a lot here. So I'm definitely not the person to ask, strength, because that's what I live on, is selling into strength. I always sell rips. Buy the dip, sell the rip, because I'm a trader. So from a long-term investing perspective, though, a lot of those sales are regrets. I'll tell you that much. From a trading perspective, a lot of those sales are good. So
I think I have one hole in her investment thesis, and I hear this from a lot of people.
Yes. What is it?
I don't want to pay the taxes.
A lot of people say that. Yeah.
A lot of people say that. They all said that back, and we won't bring it back to the tech bubble burst in 1999, 2000. But I can remember, I can remember even one of my uncle's friends there talking about it. And he's like, he was up like $1 million in AOL Time Warner, like $1 million in the stock. And he's like, well, I just don't want to pay the tax. He's like, I'm up like, $1 million. I don't want to pay the tax. And we know what happened to AOL after that. He didn't have to pay the tax.
So intern in the SCN think tank says you lighten up here and it feels like you get left behind.
That's what it does. The FOMO is happening. Like, I've been lightening up, Joel. Like, I've been in the think tank and I've been worried about this market. I've been worried about, I lightened up a little bit of AMD yesterday even. I've been lightening up because I feel like we're just so overbought on so many stocks here. I mean, when your stocks are up 200, 300, 400% in the course of like a year, and in the case of Micron, 1,000% a year. In the case of SanDisk, 2,000% in a year. I mean, even looking at these results here, which we're going to get to AV in a second, but SanDisk, Micron is up 200% this quarter, Joel. This quarter. I mean, these moves are not 100%, 200% tripled in the quarter, 400 to 1,200.
What about SanDisk?
I mean, these are huge moves. That's where SanDisk is the best stock. Going from 500, same thing, quadrupled in the quarter, not the year, the quarter. I mean, I haven't seen gains like this. You haven't seen gains like this since the tech bubble. Like again, 2000 was pretty good. 2020 was pretty hot. When the stock started going. But I don't know. The market cap creation here is astounding because in 2020 it was a lot of smaller names that weren't really market cap. Like, there was some big ones going too, but I had the GameStops and smaller market stock with a $500 million market cap goes to $5 billion. Everybody's going nuts. These are like huge market cap gains. Wealth created when you're taking companies from 100 billion to 1 trillion. In the case of Micron, I mean, or just slightly, like it's right there. So I mean, these are big gains. So I'm with you. Like, you're preaching to the choir here. I like to sell into strength, but you know what? Like intern says, you sell something and you regret it 3 days later. That's a bull market.
Joel, so I want to circle back here. So, Joel, your setup there on selling into strength was the segue into AeroVironment, correct?
We could go there. Yeah.
I just thought with the stock trading up $50 here on these results, I thought it was a I thought that's what you were going. So the quarter was solid. They reported $1.84. Analysts were around $1.45. That's a really nice beat. Sales beat by almost $100 million. They reported $640 million in sales for the quarter. Analysts were under $560 million. The guidance, though, looked light. They are expecting 2027 earnings 302 to 334. Analysts are up closer to $4, and the sales also missed here for fiscal year 2027. They are expecting 2.125 billion to 2.225 billion. Analysts are under 2.22 billion. However, the stock popped more than $20 last night, and here this morning at about 5 a.m. Eastern time or so, we just tacked on another 20 points in AV.
They start going, the momentum starts happening in this market, and it's hard to break. And fundamentals matter to a certain extent, but the bar also matters too. AV is in the gutter. Stock has been just assassinated and killed. I sold most of my stock. Well, I sold all of my stock. I just had a little bit left of my kids' RESP that I was like, it was like a nothing burger, so I just left a little bit in there. But I fully round tripped it. I bought that thing like 120 for them, went to 400. I was like, I'm going to try the never sell anything in their portfolio here. So here's the never sell. It comes all the way back down. They've never sold any AMD either, though. So their average cost basis on AMD is 93. They've never sold NVIDIA. The average cost basis is on NVIDIA, I think it's like $50 or something crazy. So, I mean, it works with some. With AV, it hasn't worked. It's fully round tripped. So I don't know. I'm experimenting with my kids' RESP, and RESP is just like their little education, like Canadian thing there. And you can put $2,500 a year max into it for each kid. So I got 2 kids, so I can put $5,000 into a year. They're not talking a lot of money here. So I've been trying to experiment the buy and hold strategy in this account. The AV one failed completely. Do I sell it today? Or do I just hold on and just keep buying and holding? It's a pretty good day for it. If I had it in my portfolio, my trading account, it would be gone. But I'm trying not to sell things out of their account. What should I do?
It looks like your kids are going to be homeschooled for a while.
Not with AMD and NVIDIA.
Then they're
going to
go.
I'll tell you, the kids RESP with the buy and hold strategy is outperforming my trade strategy. Kids were up like 60% last year, like 58% this year. So they're slaughtering me with the buy and hold strategy. So I'm like, maybe the buy and hold thing has something to it. It sure as hell works in bull markets, because every year that kid's RESP outperforms my own investing account. So maybe there's something to it.
Michael Sheehan highlighting that the expected move for AV was $18. We are up $50 here in AV. So this is very outsized from where the options bettors were pricing in.
We had some great trades in the think tank last night. And I mean, you can say, oh yeah, it's $179 or $199 a month and it's not worth it there. I mean, we just spitballed trades off this, and there was a lot of them last night. So the obvious guy was KTOS. It had already went. I'm like, okay, well, that one's going up. But the not so obvious trades were not moving. ONDS, we were spitballing that out at 810 last night. It's 861 this morning. RCAT, somebody else was spitballing that one out. Was it Carmen? I don't remember who was on RCAT. They're all over. It wasn't even up. It was saying at 1035, 1040. It's 1105 this morning. RDW, we took that one. I bought that thing last night live in the think tank at 1170 because I'm like, if the drones are all going to go, they're probably going to move into the other ones here too. RDW up 7.5% here this morning. UMAC, another one, up 10% here this morning. The sympathy moves are real here, and they were tradable moves last night. You just had to be like thinking about it. People aren't thinking about drones. I'm like, all of a sudden, they're starting to think about it. Even Joby, which we said, I don't know if Joby's going to go. I don't know if Archer's going to go. No, they started going too. They're not even war drones. These are people transportation drones, but they started to go there too. So the whole damn list of drones just went flying last night. BKSY was another one that we had. That's up this morning too. And then it even went into, I was like, Rocket Lab started going up, and I was like, I don't know, it's going to go ASTS. It's getting crazy. But they all kind of went too. So it all worked. Made my day. I hope a lot of people in the think tank made their days too. But the drone trade was the trade of the night.
Well, I'll just go to the leader of the pack here. So if you are trading these stocks, keep an eye on the leader of the pack. That's AV, double the expected move. So if you're looking for support, I guess it would be top of the expected move. And I know these stocks are not related to each other in any way whatsoever, but don't get Comcasted, okay?
We turn this into an active adjective, a verb.
Yeah.
I mean,
Comcast is Comcast. And you know what? The analysts come out and they're buying it here this morning, but a couple upgrades on Comcast here. But yeah, so we got this one right pre-market prep yesterday. It was Comcast, and you can go clip it. You can listen to yesterday's show. The stock was trading at 28.40. And I said, if I was long Comcast, I would hit the bid right here, right now. Stock was 28.40. It is now closed at 24.22. It's popped up because they got two upgrades here, 24.72. But that stock has no sexy story. AVAV has a sexy story to it. You know, war drones, we're in war times, kind of, you know, obviously under the new presidency here. So, I mean, it's, you know, Comcast. I don't know what the story here is. Charter, same thing. We're like, same animal, gives most of the gains back. So, you don't have a sexy story and you get these pops. It's a different reason. I always say, you got technicals, and you look at the chart. What is the reason behind the technicals, though? Because that matters, folks. That's what builds the next part of the chart. It's not always just about the chart. It's a lot of times the reasoning behind the chart. And when you've got a story that's just absolutely broken, like Comcast, and you get, you know, financial engineering driving the bus, which is just basically a way that we're pissed off our stock is too low, and we're going to try to bring it up in whatever way we can. Those are sells. AVAV, I have a little piece. The kids are RESP. Is it a sell? It's in the downtrend, you know, if you're just taking technicals, but it is earnings. And they obviously like something they see, Brent, because they've continued to build on it there. So maybe the guidance wasn't as bad as feared. You know, it's all about expectations. But, you know, completely different animals to really compare Comcast to AVAV, in my opinion, because one's like a completely unsexy story at Comcast.
Well, I don't want to spend too much time on this because we got a lot to other cover.
Yeah.
But their sexy financial engineering story wasn't even sexy.
Yeah.
I mean,
they were talking about spinning off their tech companies, which is like more non-tech things. I know we were reaching.
Oh, did you see the brilliant move they're making today? The brilliant move that they must have spent years to decide. They're getting into video games, Dennis. Video games.
Cool. Get into video games
cool
here.
Story.
We have AI going to create video games everywhere. Maybe they're AI. Maybe they're creating with AI. That could be it.
I think that I think that this drone trade was in that beaten down space that we talked about yesterday. I think that's where some of the strength is coming from today, especially when we're considering that expected move. And one of our new users in the SCN think tank was also pointing out strength in the LiDAR space last night, like an Ouster or a Mobileye. And right when I thought of that, I thought this is the beaten down theme. I think more of the beaten down theme that we talked about yesterday.
You're seeing a broadening out. You know, JC Peretz was tweeting some stuff out too about the Raleigh broadening out there. Obviously, JC, you know, great contributor to our show for a long time as well. This is the market right now. It is broadening out right now. You are seeing other stocks picking up the slack. I mean, we were talking about the strength in the banks. The banks have been unbelievable. Canadian banks have been crazy. Somebody tweeting out a stat. Canadian banks last year were up an average of 70%. 7-0. They're, you know, the Canadian, you know, economy is kind of in a recession here. I don't know what's going on, but certain stocks just continue to go. The banks have been fabulous here too. You know, Goldman Sachs, unbelievable moves here. Obviously, maybe off the investment banking deals, but Bank of America, Citigroup, JP Morgan, all these stocks just been flying. So, I mean, we can say, yeah, it's been a Micron SanDisk type of rally. But, you know, in the last little while, we've broadened up. Look at the XLV. Look at the XLV made new all-time highs yesterday. What the hell are drugs doing making new all-time highs?
I don't know.
In the tech market.
Eli Lilly, super
Eli
strong.
Lilly, obviously that's the back of it all, but Lilly, all-time highs here again. This is not just a tech rally here anymore, folks. It's broadening out here. The RSP, all-time highs. It's the same 500 stocks equal weighted. It's right there, kissing up to it. Small caps, right there, bunching up against it here. This rally is broadening out. And if you're a bull, that's exactly what you want to see.
Okay, before we move on to solar, I just want to, this AV chart, I just want to make just a comment that you guys are just going to love. All the people that bought between, you know, all the people that like loaded up here They're like, ho, 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 this is it. I'm gonna keep a close eye on this. And I had the 165 calls. I thought they were worthless. Boom, they're into it. But all these people, they're like, no, I am not selling. No way. This is going 200, 220, 250, 270. So a lot of people that, the shorter term traders, people, shorter term time frames, they average down in positions like this. They wait for that moment and they pounce on it. So make sure you get filed through that pre-market high. Let's stick with the beaten down stocks category, and solar is on the move today.
Solar is definitely on the move, and it's kind of just started in the last couple hours. We're seeing a Reuters report here. U.S. working on on a ban targeting Chinese energy inverters. So we have First Solar up sharply. We have Sunrun, Solar Edge. There's a few more.
Solar Edge and ENPH direct beneficiaries of this. You think ENPH right away when you start talking the inverters. And the stock is trading up 11% here this morning. And again, this fits the description of the rally broadening out and finding laggards. Leaders to laggards, laggards to leaders. ENPH has come back and went from 30 to 70 and back to 48. And nobody gives a crap about it because, its momentum's broken. Oh, God, it's below the 50-day moving average. So that means the story is over. We don't want this anymore. You know what? This is a market that they're trying to find those stocks trading on the 50-day moving average, and they're starting to move up here again. So there is some life here. I mean, even software has started to show some life the last few days. So, we are back into a laggard market here again. So that's all you need to know. Leaders and laggards have your groupings, and it changes. Leaders lead until they don't. And then sometimes the laggards start leading here. So the money rotates from the leaders to the laggards. They're allergic to cash. Portfolio managers hate cash. They don't want to be in it anymore. So they go leaders to laggards, laggards to leaders. It just keeps going back and forth. And with Micron's weakness the last couple of days, I know it came off the lows yesterday, and AMD bounced back there too. And, obviously, some other stocks did it too. But early, the last couple of days, you've seen a little bit of slowdown. SanDisk was 300 points off of its highs in a couple of days. That money rotated right back into the laggards. If SanDisk and Micron start making new all-time highs again, maybe the trade reverses itself. But understand that this market is all about rotation. Rotation is everything.
Other solar stocks we haven't mentioned here. Give me just 1 second. I just made a solar watch list this morning.
Okay.
NXT we also did not mention. Next
Tracker.
NXT, and then Shoals.
Next Power, I guess.
NXT, Joel.
I got it.
You're good. And then Shoals. SHLS. Yes.
Don't know much about this one. But again, fits the description of a laggard and, smaller names. So, all these stocks are getting nice little pops here this morning here. So keep an eye on it. Again, I'm more of a sell the rip kind of guy, so I'm probably not buying these rips. But, sometimes you get a ripper and then a little dip afterwards, and it gives you an opportunity to get on for the second ripper. That sometimes happens there too. Joel, break down the technicals. Let's go to ENPH. It's kind of your...
One of my worst tangents here in the many years we've been doing the show. Are you ready?
He's preempting his conversation with this is going to be our worst tangent ever. So get excited, folks.
I dated a girl and her name was Shoal.
That's a cool name. Does Lisa know about this? She does now.
Not, because
she does now.
That's kind of a cool name. I kind of like that name.
It is a cool name. I'll give you that.
In Triple D, I know you're going to hate this. And her sister's name was Spray.
No, come on.
Yeah.
Shoal. These are both water, ocean references.
Her dad would. Yes, you
Shoals
got it.
is like a bumpy, in a sandbar.
Good call, Brent.
Wow,
Yes, I thought you were gonna get that, Dennis, the big boater that you are.
Yeah, well, no, I didn't get it.
Yes, Shoal and Spray. I won't give their last.
That's awesome. Okay, thank you for that.
What's going on?
Oh my gosh, it's another crash.
Oh my God. Now I need to liquid. I got to move up. My investment meeting. I love the market.
Investment meeting with the boss.
To the next.
Put your thesis on that the market is tough. I've raised cash, but I tell you, I regret it. I'm regretting it right away. Every time I sell a stock, I regret it the next day. So I'm not going to say that this bull market's over because we just fell 15 S&P handles.
Either am I.
Today.
Either am I.
until it starts falling 30 or 40. I'm like,
Okay.
it's over. Cashed in. This is the worst market I've ever seen.
No, I'm just talking about selling industry. I just want to alert, and I'm not going to look at all these individual charts. This is a very important thing. When you have a stock in the pre-market go over $60 to 60.41, and then it checks back to 52.60.
It's a pretty good dip. We're already on the dip.
Yeah. Oh, buy the dip. Yep.
Well, maybe you do actually.
Maybe I would be, more apt to sell this at 58 than I would to buy it at like 50. I mean, that's just, there's some overhead supply and some volume traded on that. So some people are like scratching their heads here, but
Okay.
keep an eye on that. Okay, sorry about that. Here. No more tangents for the rest of the quarter.
None for the rest of the quarter here. We got the hottest person in the whole world, Leopold Ashen Brener from Situational Awareness. He's got his new stock, and it's Shaz. I think he already had some Shaz, but he's got more Shaz now. Is that correct, Brett?
Yes, that's correct. He had some Shaz. He has now over 5 million shares of Shaz. He has, I think it's 19.9%. I wanted to take you guys through a little quick lesson on how we can find this information really quickly using the SEC's Edgar website. So let me share my screen real quick. We're going to just start from like the main SEC page because I don't even know if people know how to use this thing, but there's this really nice search bar up here. And so we can go to, you can type in a ticker, you can type in a company name. We're going to find our Shaz here. Look, the filing is right here. You're going to click this little filing button and it's going to pop over to this filing. And here's the actual 13G filing. You can see it's on Sharon AI. You can see it's by Situational Awareness LP. That is Leopold's firm. You can see the number of shares here. You can see the percent of class represented by the amount in the row. Okay, so here's our first part. Once we have this information, we know that there's a 5.4 million share stake, but we want to compare it to the last one. So what do? We go back and we look at the last filing by Situational Awareness. This is their 13F filing from, I think, May. And we're going to look for Shaz, and we're going to find Shaz right here. And we see that he had 800,000 shares. So this stake is raised from 800,000 shares as of last quarter now to over 5.4 million shares. This is substantial. This is a substantial stake for sure.
So boom, big buy, the hottest person. It used to be about Warren Buffett, but we know even on the last 13F season, it was all about Leopold. What did Leopold do? If you don't know Leopold, give us the background. This guy, some people maybe never heard of him. Leopold Ashen Brener. He's the guy, he's the AI darling kid that took his fund from what, like 5 million to 5 billion or something crazy?
Yeah, maybe even less than that, and maybe even more of that. But the last time we talked about him, Dennis, our takeaway was kind of like, this is the guy that drank the Kool-Aid, the AI Kool-Aid early, and it seems like a lot of people are kind of admiring him for that.
I drank the AI Kool-Aid early as well, but I unfortunately didn't have a hedge fund and didn't have the money he did, and he did it better. Raised a lot of cash, and he's going crazy here. So good on Leopold. He's killing it with his picks. He's better stock picker than me too, because I didn't have any Shaz, and Shaz has been unbelievable from $20 to $88. So good job, Mr. Leopold. And again, so when you're seeing these filings, it matters who does the filing too. You can't just say, oh yeah, insider buy. Okay, we're all excited about that one. It matters what the company is and who it is. Sexy AI name, sexiest, hedge fund manager out there with Leopold, from being hot as hell. So the stock's popping substantially here this morning. Joel, technicals on SHAZ.
Like what? I mean, because this has happened a couple times. I would ask for the price action on that day. I mean, didn't he do that with like TE at some point too? T1 Energy.
I don't know.
Yeah, that's up, and then a short seller came out and said it's worthless. So, I mean, it's a nice pop if you have targets in this area. Well, take them, but I don't know. I mean, he's done well. It's a pop. Keep an eye on the action. It did get over. Once again, you do have a leak going on. You got to 94.43. You're back up at 88 down at 88.40. So some people look at it is up $8, where we look at it is it's down $6. So
down $6 from the after hours high.
Yep.
Swinging back just to our RDW, because obviously we're trading this off of AVAV earnings last night, but then you get lucky and you hit it with with a contract this morning. What did they get here, Brentster? Because RDW is not just trading up just on AVAV. Started really ripping went last night when it got this contract.
Company announces it has been awarded a contract by Taiwan Color Optics, a subsidiary of Semilux, to deliver its Penguin MK25 VTOL uncrewed aerial system. I don't see terms disclosed in this press release, but I mean, this is a name where I think some people had been looking for an excuse to dip a toe in.
And in 7:30, just 8:30 numbers here too. We just had Sarepta got full approval, just breaking here at 8:30. I just saw the stock pop off. FDA accepts Sarepta's applications to convert 2 DMD drugs to full approval here. So if you're looking at Sarepta just popping at 8:30, just pop 5%. That is on that headline. I mean, RDW fits the bill of a laggard. And we've been talking about the leaders to laggards market here. And laggards are starting to lead here a little bit. The last couple days, it's been about the laggards. RDW from 25 back down to the support of 10 to $11. I mean, red wires come all the way back and round tripped it all here, Joel. What are your thoughts? Talk to us.
I mean, you're off the pre-market high. Once again, you're 60 some cents off the pre-market high, 1307. So immediately you want to see follow through that to that area. There was a seller at 13.25 back on June 23rd. So that if I had the stock, I saw the news. I don't know if I'd be running out to buy it, but if I had it, I'd say, come on, regain that bid, get back up to the pre-market high, keep it going. So we'll see. The top of yesterday's range, if you're looking for a gap fill, is at 1189. Our guest shows up early. They come on early. That's the way we work here at PreMarket Prep. All right. Good morning to Cameron Dawson, CIO NewEdge. Well, Cameron, end of the quarter. We're so happy to have you on. How you doing?
I'm wonderful. Thank you. I've missed you guys. It's been ages. So I'm so happy to see you.
You're a busy young lady, but okay, let's jobs number Thursday. Whew, boy, everyone fasten your seatbelt. Payroll growth is slowed, but labor market still seems, like it's still doing okay. What are you looking for in that employment number to determine whether or not this impending recession is coming?
Yeah, well, it seems like we've had this impending recession for quite some time, and it's never fully materialized. And this labor market has just been so very resilient versus what expectations have been over the last few years. And part of that is this supply-demand factor. We know that the supply of labor has certainly slowed. We've seen no labor force growth over the course of the last year because of immigration policy. So that means that you don't need a lot of incremental jobs in order to keep the unemployment rate flat or even to tick slightly lower. So you can be in a world where job growth remains rather anemic, but the labor market remains fairly tight simply because you're in an environment where your labor force isn't growing. Now, there's a few things in this report that we'll be watching really closely. The first one really comes down to wages. I think the wage story is the most fascinating in this labor market right now. You're in an environment where the labor market on the surface appears tight, but we're seeing very poor wage growth and wage growth that is actually tracking below inflation. So if you look at real wage growth, that is nominal wage growth that gets printed minus inflation, that's been negative on an ex-transfers basis. And if you look at this month's report, it's expected to be at about 3.5%. That's, of course, below the headline inflation rate. So at what point do some of these inflation pressures, if they ever show up within the wage line of things and cause you to have a little bit more wage pressure pull up? We're not quite seeing it yet. And apparently my new office is located right next to the line of some kind of firehouse. So the more you know.
Nice.
Oh, there's another cell signal going off right there in the
goodness.
background. Okay, Triple D hates quizzes. and he
Oh, no.
hates like when I throw like hard questions at him. But I know you're great at thinking on your feet, so I want you to fill in the blank on 2 questions. The market is underestimating, and the market is overestimating.
Oh man, no wonder Triple D doesn't like
Yeah.
quizzes.
Awful. You're on the spot. It's live, and he wants to just throw random crap at me like this. And I suck at quizzes. I was always the one that, like, on the spot, I get all flustered, and I need my time to think here. But when you're on live TV, unless you're Elon Musk and you take 2 minutes there, blanks, just to think out your answers here, it's hard. So, okay, market is underestimating, market is overestimating.
So I want to amend it slightly, because I think that if the market was overestimating this, it would be the worst case scenario. So meaning that the market can overestimate something or underestimate something, but if it doesn't matter, then for markets, right? So if we're thinking about what is the thing that if the market was overestimating this factor, it would be the biggest impact. I think that the answer to that is overestimating how much further upside there is to hyperscaler CapEx growth estimates into later in 26 into 27, because the story of why you've seen such a massive AI infrastructure trade over the course of the last 6 months and the move in semiconductors has been so extraordinary, up 86% on a year-to-date basis,
Wow.
or even higher after yesterday, has been because you've raised CapEx forecasts from hyperscalers significantly. This time last year, people were expecting 10% growth for 2026. At the beginning of the year, they were expecting 30% growth. Now, the growth rate for 2026 CapEx is tracking at 90%. So we know that the market is always about looking forward and versus expectations. So the fact that you've been raising your forecast for that growth so significantly, that is certainly why we're seeing this big pull higher in anybody who is receiving those CapEx dollars. So if you're saying that if you look into 27 numbers, people are saying at least $1 trillion. So you're looking at something like 20% growth on a year over year basis potentially. But I've seen estimates of 1.2 trillion, 1.5 trillion. And so if the market is overestimating how much more upside there is to hyperscaler CapEx, then of course that's an environment where you could see disappointment in those that are receiving those CapEx dollars if everybody's expecting that it's going to be 1.2 or 1.5 trillion dollars. So that would be my answer to the overestimating.
What about the underestimating part? What is the market underestimating here, Cameron?
She's thinking.
I'm thinking.
We'll give you time. Like 30 seconds. Like put the clock on there. We could like play Jeopardy or something.
I love Jeopardy. And hot take. I think Ken Jennings is an absolutely fantastic host. So
he's good. He's doing a good job.
I'm a big fan of Ken. I think that I think the easy answer would be is like the market is underestimating inflation risks. At least the bond market might be. I mean, if you look at break-even inflation expectations based on bond market pricing, they've come in significantly. And effectively, the bond market is telling you that it believes that the Fed is going to be successful at getting inflation back to 2%. And if the Fed even shows a little bit of dovishness, let's say whatever data we get, maybe on the labor side of things that could open the door for that, or worse, really pushes to say, let's say, redefine what we think the inflation target should be based on something like trend mean versus the current core PCE. That would be where the market might be underestimating at the long end of the curve what the longer run inflation expectations are. So the long end of the curve has remained very stable, very subdued, because the bond market effectively believes that the Fed is going to be successful at taming inflation. If you don't have the Fed fighting the fight, which, Warsh came out and said, look, we want to get inflation back to 2%. And that's why the 10 and the 30 rallied. But if he then comes out and says, oh, no, we're going to change our definition of inflation, then you could see maybe some backup in the long end of the curve, which would be, of course, important for bond portfolios, but potentially important for equity portfolios as well from a valuation standpoint.
Cameron, just on that topic, I've argued, and some other people have argued as well, that AI could maybe solve the inflation problems. Maybe AI is deflationary in itself, where obviously you have a lot of, companies that are replacing, humans with machines, meaning you can make things cheaper. Maybe it gets more competitive. Like, what are your thoughts here on AI and inflation? Is AI, going to be inflationary? Like maybe it's going to be, that prices just keep going up anyways? Or is there a case where AI actually is deflationary and could be, to change the thing, maybe what the Fed needs?
Yeah, so in your multiple choice quiz that you just gave me, so you're just as bad as Toll Triple G, is that
gosh.
you have
That's a
A,
compliment.
it's going to be inflationary. B, it's going to be deflationary. I think the answer is C, that it's both, right? So it's
Okay.
it's inflationary today. You clearly see it in the numbers. You see it, of course, after Apple raising prices because of memory cost increases, but you're seeing it within the software line of inflation as well. And clearly there are signs of huge infrastructure demand from the build out of AI that it is inflationary. That is today. The question is, how much will that infrastructure have to scale as the adoption of AI increases? I mean, that's what's fascinating about AI, is that you're not seeing that same kind of operating leverage when it comes to, effectively, for every increase in token that I have, you have seen some increases in efficiency from token users of the models, but you have to increase CapEx a lot in order to generate those sales. So you're not quite seeing this benefit of scale at one point where all of a sudden you get these kind of power law dynamics where you're able to see a ton of earnings and revenue, because once you've built the infrastructure, you don't have to do it anymore. The question is, what's the ongoing of the infrastructure build out? So maybe it has an inflationary component for a longer period of time. Eventually, there is potential for it to be deflationary, right? Deflationary to the labor market if you're able to make workers, potentially more efficient. Now, if you have more efficient workers, you should actually be paying them more. You just need fewer of them. So maybe it creates slack within the labor market that could potentially be deflationary. The hard part about this is that Warsh has come out, and this was, of course, something that Myron talked a lot about as well, is like, look how successful Greenspan was. He understood that technology was going to create productivity, and that allowed him to keep rates lower than what you would have normally expected during, a period of a boom, because you had productivity. And effectively, Warsh has said, look, we're going to get productivity, so the neutral rate can be lower. The problem with that, of comparing to the 1990s, is that you actually didn't have an inflation target in the 90s. Inflation ran in the 3s in the 90s and even popped higher at different times. So inflation ran hotter. And that's because there actually wasn't an explicit inflation target until after the great financial crisis. They didn't adopt the 2% target until after the GFC. So comparing that environment where they actually had a lot more tolerance of inflation than the the explicit inflation target Fed that we have today is a little bit of apples and oranges. So it's hard to say we should change monetary policy today for potential benefits that may or may not come based on spending that is currently inflationary. It feels like it's putting a little bit of a cart before the horse.
Yeah, and I think Warsh just seems like he's going to set his own precedents and his own agenda, and he's not going to try and get bullied by the market. We got to talk about the semiconductors here, the leadership. I mean, going with the strength in the market, the hardware. Do you see that? I mean, we're starting to see a little bit of rotation now. Do you just see, the semiconductors just taking over once again, or is this rotation, which we're seeing now, going to continue?
Yeah, I mean, it's been a really choppy June, and semiconductors are up about 6% in the month of June. The overall market's down about 2%. So they've been able to continue to eke out gains. But this is coming off the back of an incredible overbought condition, not just on the daily, but on the weekly and on the monthly for semiconductors, because they move so far so fast in April and May. And so we shouldn't be surprised to see some digestion continue within those areas, and that choppiness that we've seen likely does continue. I pinged one of my PMs yesterday, and I was like, "Whoa, Nvidia trading at its lowest valuation in the last 5 years, and at support. Like, is that something that's compelling? Like, should we be re-underwriting after Nvidia has certainly lagged what you've seen in the memory space? Obviously, it's sort of like that great meme of the guy and the girl walking, and then there's the other girl, and the guy's looking at the other girl, and that dynamic where everybody's just focusing on memory, and then you've had sort of the doldrums in other spaces of the semiconductor index. I mean, look, it's overbought. So like we can't, it got very overbought. So we cannot rule out further volatility. I thought yesterday's trading action was really interesting. We saw it open lower, big rally higher, bounced off its 50-day moving average. So it's looking like it wants to keep this near-term uptrend. But I always come back to the Bob Farrell rule, which is that parabolic advances go further and last longer than you think, but they don't correct by going sideways. Because you had such a parabolic move higher, we cannot rule out volatility to the downside. It doesn't necessarily mean that the trade is over, that the world is over. It's just to say that it would be very normal after when you traded 90% above your 200-day moving average that you saw some downside vol. But I think important to note, you got to, what was it, 120% above your 200-day back in 2000 and early 2000. So things can get even more extended.
When we have you on the show 1 year from today, right, and midway through the year, and they say Cameron said to look for this in the second half of the year, in the second half of 2026, and boy, she was spot on. What would that be?
I love that this is now the essay portion of the quiz.
It's ridiculous.
We had the fill in the blank. We had Triple D's multiple choice. You've contributed to this, and now Joel is doing.
I got one more after this.
He's doing the waxing poetic essay version of the quiz. Look, I think I know I've said it, but I do think it all comes down to hyperscaler CapEx forecasts. And they could project 20% growth and say, look, it's great, it's awesome, it's 20% growth. But if the market is expecting 40 or 50%, you have a problem, right? Because effectively you have this whole downstream effect of everybody expecting another year of supernormal growth on top of the 90% that we've already had. And I wrote about it over the weekend, inspired by 9 Inch Nails, saying that the market was biting the hand that feeds by trading the Mag 7 lower. Because these, of course, are the companies, we know this, that are spending all the CapEx dollars that the AI infrastructure names are receiving. And the question is, if the market continues to punish these names, they have lagged semiconductors by 90% this year, 90%, which is absolutely wild. The market continues to punish them, then you could have a situation where they start to pull back on their CapEx forecast. So I've been watching CDS spreads for a lot of these guys. I think it's fascinating that you see folks like Meta going more off balance sheet versus trying to borrow regularly from the bond market. Like Google's a bit of a different story. They have a negative net debt situation, which just means that they have more cash than they have debt. So they have lots of room to borrow and spend more money. But folks like Oracle, probably not nearly so much. So a lot is riding on the CapEx plans of these guys. And we think of it as kind of like a prisoner's dilemma. Right now, the equilibrium is that they all collude. Remember, prisoner's dilemma is you all collude and you all agree to just keep on spending more money. Because if you don't, then you effectively admit that the money you've spent is not going to have the return that you said it would. But what happens when one person defects and they say we're cutting CapEx forecasts or we're not going to raise it as much, and all of a sudden their stock goes up because they're showing more restraint in their spending, then you could have a situation where CapEx numbers disappoint. It's not necessarily a base case, but I think it's the most important thing to watch.
All right. I thought I'd let you go with an easy one here. Okay.
You got another question?
Yes, I do. This is a good one.
Boy.
Okay. If you guys follow Cameron and you read her fantastic, informative newsletters, she always likes to attach a song. Right? You're a big music lover. And you even go back to some of the old stuff that I know. So I'm going to give you 3 songs here. and you tell me which one best describes.
and he's gonna give you songs from the 50s because
No,
he's old.
I think she's gonna know this. I think. Okay.
I'm not gonna know any of the songs.
The first song is by the Baha Men.
Oh,
Who let the dogs out?
yeah, of course.
Okay.
I know the Baha Men.
Okay.
Of course, who doesn't?
Good.
Who let the dogs out? Is this time that like just buying those ugliest looking?
What are the other
shirts?
two songs? Stop! Stop!
Okay,
You said
okay.
3 songs.
Okay,
Get
how
into
about
it.
the song remains the same? Led Zeppelin.
That's a
I
good
love
one.
that.
Okay. Or you might not know this one. The good old Pat Travis band, Boom Boom, Out Go the Lights.
Who's the Pat Travis band?
I don't know that. I've never even heard of them.
I
It's
mean,
going back to the 40s now. We're skipping that one.
Yeah, I mean, I like, to go with your Who Let the Dogs Out. We have been seeing great band from the 90s, Garbage. We've seen a lot of garbage rallies already. Like, look at Unprofitable Tech being one of the biggest leaders in this market. And I think what's fascinating is that you're seeing huge rallies in something like Unprofitable Tech, but everybody should look at the triple C spreads. Triple C is the junkiest of the junk when it comes to the high yield market. And triple C spreads have widened by about 200 basis points this year to about 800 basis points. Like, that kind of thing is really interesting, that the bond market is having some concerns or lack of availability of credit. Maybe people are worried about growth, or maybe people are just not getting access to the capital that they need. So spreads are widening out. But at the same time, you're seeing this growth, this huge performance in unprofitable tech. So there's a big dichotomy there. So I don't know. I like Who Let the Dogs Out. I think that's a good one. I haven't decided on we're working on our outlook for the second half, and we haven't quite picked a song yet, but you'll be the first to know. How about that?
Thank you so much, Cameron Dawson, CIO, NewEdge Wealth, joining us on Pre-Market Prep. Thanks again, Cameron. We'll be dialing you up again.
You passed
real
the
soon.
test. You passed.
Oh man,
Good job.
was it pass fail, or do I actually get a grade?
I only took economics and accounting pass fail.
So it's only pass fail, I guess. So you did excellent.
A
Excellent.
plus.
Well, I've
A
never
plus.
You're
gotten
A plus. You give the grade. The teacher gave you an A plus. I never got an A
got a B
plus.
in my life, so if you were the first one to give me a B, I would be crushed.
Awesome.
Thanks for being
Thanks,
such a good
guys.
sport, Cameron.
Great job.
Bye.
Thanks, Cameron.
Okay, we just survived the last correction of Q2 when we dipped under 7,500. But let's talk about SPACs. Dennis, did you say
I know.
SPACs? on the
SPACs
pre-market
attack
show?
is back, actually. We're going to bring it. Money Mitch is with us here. We could go get Catchy over there and bring in SPACs attack again, because you know what? The SPACs are moving here again. I guess we're in this market where we're broadening out as much to even bring the SPACs going. CCXI is one that's went from $10.39 5 days ago to now $16.40. CEPT, one that we were trading back in the think tank last year, has exploded higher, going from $9.74 up to $13 here. There's other ones that are perking up and starting to look pretty good here too. So we're just saying, the SPACs attack, again, broadening out market here, but some of these stocks are moving here, and obviously some are pre-SPAC, people speculating that they're going to get a deal. And then there's other ones that, have a deal already, and maybe they like the deal, like CEPT. Stock's going to obviously, de-SPAC at a certain point in time. Maybe it's the, that process and that going as well. But I've been noticing in my filters, because I have scanners that are scanning the markets, looking for movers. I've been noticing, I didn't notice any SPACs for like the last months. And now all of a sudden, I'm starting to see SPACs pop in there again. I was like, is it back? Is the SPACs attack back? We'll ask Money Mitch that tonight on our 7:30 show. But I think it's starting to show up here again, the SPACs. Joel, what are your thoughts?
Oh, another point to excessive speculation in the markets.
Kind of. True.
Yeah.
Kind of.
Yes. Usually when SPACs start going.
Yes.
Brent says yes.
Yes. Fair point.
It's a point well taken, for sure.
You guys want to do a couple quick ratings here?
Yeah, let's do it.
All right, so we had a bunch of names in the credit card and payment space from Piper, but Dennis, you had another one in the financial services group. the banks being downgraded at Oppenheimer, and it seemed like did they put a couple neutral or sell ratings?
Yeah, they did. So you don't see this every day, and that's why I clicked into this note right away here, because when I see Oppenheimer downgrading Goldman Sachs to underperform, I'm like, whoa. Now, again, they were out of perform for a long time. The stock has really been moving, so this analyst obviously been on the wrong side of the trade, but they are doubling down and now saying sell. Underperform means sell in analyst community here. Goldman Sachs trading down 9 points here in the pre-market on this rating. Analyst comments, Chris Kotowski. Downgrading from perform to underperform. Okay, so analyst comments, we still think that both the commercial and the investment banking businesses are still relatively mature, cyclical, and that these companies are still relatively heavily levered, and that sooner or later, another fear cycle will emerge, and that this is clearly not priced into the stocks at these valuations. Thus, we're going to err on the side of being fearful when people are greedy and are downgrading Bank of America and Citi from outperform to perform, and Goldman Sachs and Morgan Stanley from perform to underperform. We recommend that investors redeploy the proceeds from any sales in the alternative asset managers, particularly ARES, BX, and KKR, where fear clearly rules the day. Managers' balance sheets are not as levered as the traditional intermediaries are. So they are basically saying sell the banks and buy the alternative asset managers, which have been killed, like ARES. So a big, bold call. BX, which has been killed as well, and KKR. So they're saying the banks are overbought and these asset managers are oversold, and they're saying this trade is going to reverse. So it's a bold call by Oppenheimer. Thanks, Street Insider, for the color as well. This is a bold call here. So start with Goldman first, Joel, then maybe we can talk about some of these alternative asset managers.
Wow. Well, this guy sounds a heck of a lot smarter than me and does a heck of a lot more research.
Me
so,
too. I don't.
Yeah. I
mean, I know what banks do, but
I mean, I'd had to get a thesaurus out to understand that report. But I mean, the only thing I'm taking here with Goldman, and probably no one else on Wall Street is taking this. This was, you know what that coincided with? What do you think that coincided with? The SpaceX IPO here. All the money. So, I mean, I think there's, SpaceX is cooled off. The market is cooled off. I mean,
going on that, Joel, just to expand on your thought, I want you to continue your point here. But we also had, news last week that maybe OpenAI and Anthropic were going to delay their IPOs till next year.
Yes.
So I think that cannot be underestimated either, because you think the SpaceX was a money grab for Goldman, obviously, here. Well, if you get OpenAI and Anthropic, which would mean the next two money grabs not till next year, I think this coincidental sell-off is not much of a coincidence here. I think actually with the OpenAI stuff, I think Goldman Sachs, Morgan Stanley stock may be suffering a little bit there with the rumors that these two big IPOs are not going to happen until next year.
Yeah.
So great point.
Yep. And so, where you're at, I mean, you've been in Goldman for whatever. It's down back near 1,000, huh? I mean, big 4-digit numbers like that. There's a trio of lows there. You're still $11.50. I mean, I would keep an eye on it really all the way down until it breaks the 50-day consistently. I think you still have to ride the trend and, ride the trend of this market. So, that's it. 870. Morgan Stanley the chart looks just the same, right? Trading down on it. As far as like dumping these and going into BX and the other credit stuff, I mean, that's just like selling the good stuff and buying the bad stuff. If that's
it is 100% that trade. But if we're going from a leaders to laggards market, maybe the timing of
maybe it's good call.
Maybe the timing of the note is okay here. So it's interesting. The three that they cite, again, so just to repeat those tickers there, ARES, Blackstone, everybody knows Blackstone, and KKR, huge asset managers, alternative asset managers, and they've been beaten right up. They were worried, there's been, worries and different worries in the asset managers here. But, I mean, it's funny how good the banks are doing, yet the asset managers are just in shambles here. So it has been the tale of two markets, even within financials itself.
Yeah.
Bitcoin going down here again today. It's taking out, obviously, it's approaching we're through the 60,000. We're trying to take out and make new lows here again. I mean, we got Michael Saylor talking about selling stock here yesterday.
Oh, wait, he's selling, he's buying, he's selling? What's he doing?
There's rumors he's going to sell $1.25 billion worth more. I mean, obviously, they have bills to pay there too, so they have to, do some sales here, but that's a big sale. So the little sale before they had a few weeks ago wasn't that big. This is a big sale here. And whoever was buying that relief pop yesterday on MSTR, because it did pop back a little bit yesterday, we were looking at it go from 82 to 92, and they're like, oh yeah, that's the bottom. Well, you're going to get another chance at the bottom, it looks like today, because it comes right back down here. 9 a.m. news dump. We got Brentster watching the news wires. Going to jump in and see if we see anything.
Didn't see anything exciting yet. SoFi
well.
press release. SoFi introduces small business loans to help members pursue their business ambitions. Might be a bit fluffy here. Visa out with the press release. AI and digital currency power global economic growth amid rising costs. That looks fluffy. Let's find something that's not fluffy here. Progress Software launches Chef Enterprise Management for NVIDIA DGX Spark. That seems fluffy too.
And fluffy, you mean, is like it sounds like they're just trying to sexify a headline. Like it's cool, but it's not like, oh, this is a game-changing deal for them here. Like I see Netgear introduces the next generation of insight, advancing the future of AI-driven network management. I mean, these marketing teams are out there, and really trying to pump their stocks too. And they try to get the AI in there, and they try to get, everything else that's hot and sexy in there. So, I mean, that's their job, try to really get it out there and get our stock going.
Yep, that's
even Travelers. Look at this one. Travelers Cruise advances AI strategy with award-winning insurance specific large language model. Travelers Insurance Company, man.
They're trying at least.
They got the AI in there.
You guys are killing
all these AI stocks
actually...
go. This is what the 9 a.m. news dump knows now. How many big companies that aren't AI are trying to put AI in their headlines there? Travelers wins the day. Travelers advances AI strategy with award-winning insurance. I love that
Webull Canada to offer crypto trading. Dennis, joking, but it's actually a good point. If you see a press release that has, kind of like some adjectives right in the headline, like award-winning insurance, usually that's a signal that it's a little bit of a fluffy release. Yeah, nothing. A super quick glance while we're on here. Air here at the 9 a.m. I didn't see anything super exciting, but we're gonna. Actually, what's this? Globin announces an alliance with Anthropic. GLOB. Okay. That stock is moving here. Let's click into the release. Globin is expanding its AI pods offering by introducing Claude-powered AI pods. So look at what these companies are doing here. Globin is using Claude. We can all use Claude. We're all maybe using Claude. Globin is using it here though, and the stock moves, $1 higher on it. This is what these companies are doing in this day and age, ladies and gentlemen. Got to keep your eyes on the wire.
I just wanted. I know we're running a little overtime here, but we're trying to bring you guys some new stuff in the second half of the year, and we got something to announce to you probably at the end of this week or early next week regarding news, right? News that moves the markets and some stuff that we're working on here at PreMarket Prep and the Stock Trader Network. So we're excited to introduce that to you guys. Wrapping things up. We're down 4.5 handles. As always, look, if you want a rah bull day, let's get back up to that pre-market high area, which does not coincide with any level I have whatsoever, and continue our move over 7,500. Tomorrow, Blue Putnam joining the show. This guy, he basically could do a 3-hour show, but he's coming on. He's going to talk a couple topics. One final thing. I got an email this morning from Kalshi. Okay. And I can no longer bet on sports on Kalshi in Michigan. Michigan outlawed it.
Oh.
There's a lot of, so I don't know what's going on. I know you guys are all super bullish, your DKNG and your pen and everything. I don't know. This landscape of sports betting, to me, I don't know. So just, I don't know. Kelsey's not publicly traded, but if other states start doing this, then it's going to spell some trouble for some of these sports books. That's it on this Tuesday, Synthetic Wednesday, folks. Thanks. See you tomorrow.
Thanks for watching PreMarket Prep. Hit like, hit subscribe. Join the SCN Think Tank at StockTraderNetwork.com.